Hello and welcome to the Wednesday check-in here on Landy's Crypto Corner. Today is February 26th, 2025, and Bitcoin has broken the daily range and headed down to our areas of interest that we discussed on Monday, the week prior to that, and for quite a while now, actually, since the beginning of the month, in fact. So we're actually going to revisit where we kind of started the month when I was talking about the macro picture. And this is just kind of to check in, and I want to remind you of what I had said during that time period. I had noted that the January close, while it did close above or right on the upper second standard deviation of the Bollinger Bands, on the close open, we had the upper second standard deviation away from the basis band here, which is a 20 simple pass price action. Even though on that close, it had closed above. But on the open coming into February, passes price, I had noted that means that Bitcoin is playing in between for now in terms of levels of interest for volatility, the upper second and the upper first. The upper first, of course, right now is around 82. While this was dipping down, it was closer to like 80 to 81 because it does ever so slightly move intra-month or intra-candle. So while the candle is still open, the upper first will slightly adjust to price action, and as will the upper second, which is up there at just shy of 105. This was closer to 105, 105.5 at the beginning of February, but we kind of talked about this as a possibility because this is the range of volatility that we are most interested in for the monthly. And if we close below the upper first, then we have to start looking lower and above the upper second, and then of course closing above the actual all-time high, then we'd be looking for continuation and for expansion to continue upwards. As it stands right now, this move is not something that surprises or should surprise any of us here or any of you that watch me. We've been talking about this for quite a while. It was just a matter of, watch the range until the range breaks one way or the other. And in this case, it did break to the downside. Now, this is just a little bit of a reminder. We are going to talk about the monthly again because we do obviously have the monthly close coming up on Friday. So what we'll do is on Friday, I'm going to be recording the video after the daily and then, of course, the monthly close. So we will follow up with this. I will say I'd like to see the upper first closed above for Bitcoin here. But, either way, if Bitcoin closes anywhere like here, it's likely going to see the upper first pass price action on the close open. So it's going to be a matter of where does the basis band land. Currently, it's at around $60,000. I would expect this to increase. Where was this? This was like 57. It's probably going to be like $64,000 next month. We'll have that updated on Friday. So let's go back to the weekly and kind of revisit what we were talking about on the weekly time frame, as this is a compression phase even. Excuse me, been talking all day, my apologies. So we had the big accumulation structure, from the then new all-time high prior to the halving, where Bitcoin was coming off of an expansion that started in January. It started to kick off a little bit earlier than January, but realistically it was basically January through to March, right? And that was driven in large part by the ETF accumulation, right? 4 spot ETFs that were approved on January 10th. And then, of course, price went sideways and down until basically fall, right? So we had spring and all of summer, price was headed sideways and down. And then coming off of that expansion, going into a compression before re-expanding to the upside. And then we have now seen price going sideways for quite some time. So we had our first a big high that was put in there on a close here for the weekly on early December, mid-December. And then of course we saw a higher low, 93.5. That was we'll take a look at that again. So that is the weekly higher low structure. And then we had the higher high at 109, 360 or so with the lower high close. So this was kind of our warning signal. It's consolidation. We're seeing that reflected in the bands as well. Now we have broken that tighter consolidation and now headed down through the basis band, which was hugging the bottom side of the range at around that 91 and a half or so. And we noted that the lower first is at around $80,000. Now, granted, it was above $80,000 when we talked about it on Monday, but we've talked about $80,000. Should the range fail at 88,700 to 92K, which was the base of support for the range, if that failed, Bitcoin could save itself, in the mid to upper 80s, so 85 to that 87.3 or so. But realistically, if it loses 85, we're looking for around 80K. We got the move towards that. Is that still a possibility by the lower first? It's still on the table. I'm going to show you why in just a moment. And then, of course, I also noted that because we're moving from expansion into a compressive period for price action, that when we see the band swooping up towards the basis during a compression phase like this, typically we look at for supports, we look at the lower first, second, and third as being the support areas, right? Upon first pass at least. And then we, in the lower term timeframes relative to the weekly. This is now at 80,500. I would say 80,000 is fair game, with Bitcoin playing under $85,000 and even finding it as resistance in the lower term timeframes. And then, of course, to the upside, the upper standard deviations acting as resistance. So support and resistance in terms of volatility levels of interest. And then, of course, we find confluence with those levels. That's really what we're looking for. And I'm going to draw or put up a fib that we had previously seen, and I want you to kind of see how prices played out. We haven't looked at this fib in a while, but this was one that we were referencing on the breakout. And we went from, let's go ahead and actually get rid of the bands here for just a moment. I will turn them back on just to kind of point out, the relative levels of confluence, but just in terms of fib retracement with extensions on, for the prior range that we saw Bitcoin break out to form this range up here. We have we saw Bitcoin, head up to the 1888 level up here, and kind of tag that area and kind of oscillate around this 1786 extension. Has now come down and tagged that 1272. And of course, there is a 1.168 at around $79,000. And you can give or take $79,000 to $80,000. It's pretty confluent with that lower first standard deviation. If we do see that, kind of fall apart, then we're looking for, essentially mid to upper 70s, 75,000, 80, and then, going in for a retest of 70 to 75,000 by that lower second. So I'll turn on the actual, forgive the kids in the background here. But there is that 888 down here by the lower second, right around $70,000. We have the lower first just below and in between the 1.168 and the 1.272 here. So roughly between 79 and 82.5, we have that lower first. So mid to low 80s, fair game, and on the table right now. If it does break down from there, it's a range retest essentially. I'd be looking upper 70s, and then, mid to lower 70s for a retest of this structure in here. And because it is a compressive phase, I'm not going to say that it's destined for that area right now, because we would need to see the daily starting to close below that lower first, around that $80,000 region. And then if it hasn't already headed for, the upper 70s, 75 to 80s, if it starts to break down from 80s, obviously in the upper 70s, but then 75 is going to be a key area to watch out for to a retest of this range, between 70 and 75. So that is kind of the next phase if this does get continuation, but I would be looking for pretty strong buybacks in those areas on any kind of a retest, and because the weekly is going into this compression. So, and I keep getting the oh my God, it's over, it's a bear market, all that kind of talk, kind of thrown my way here. And I still would like to remind you that this is an uptrend. This would be a high. Yes. Would it imply a possibly a further pullback once closed? If it closes anything like this? Absolutely. Does that mean that it's a bear market? No, it is a bull market structure. The sentiment is certainly bearish right now. I'll give you that. But we're going to talk about a few things here. So the hopium for bulls right here is just hold the upper first on the monthly, and then kind of hug it on the way up. And that would be the preferable thing for bulls. I think a full-on mean reversion back to the basis band is going to put it in a retest area for that previous range from the middle of last year. So let's go ahead and look at that daily. Let's go ahead and turn on our support and resistance and kind of observe what is going on here. And, we can even, should we pull it? We'll wait on the fib. But let's go ahead and we'll take a look rather at the local structure here. And we can see we can see basically what essentially occurred. We had the low close here. This was the lowest close in the range. That kicked off a retest of 92. And then we did get a close below that 1.168. This is from the prior cycles, bull market to bear market. Bull market high to bear market low in terms of fib extensions. This is the 1.618, closing below it at 88,700. Made a run for the upper $85,000 region, retested this area, and then dumped on through $85,000. And even in the lower term timeframes, it did try to hold support there. Like on a 15-minute, if you go and look at the 15-minute, you can see kind of how price was acting in these areas. Came down, top side of the range, tried to reclaim it, dumped all the way down to the bottom, wicked through it, tried to hold it, started to lose it, started oscillating around, got that front run of $85,000, which is a daily bear candle from the expansion up. It's the first bear candle. So it was significant. It did try to reclaim our 88.7 to 92 zone, dropped down, failed, and then tried to basically hold on to 85 for a candle here. And the bulls could not hold up here and have now found $85,000 as resistance. So let's go ahead and just go back to the daily here and kind of show exactly what that is. Let's get rid of the Bollinger Bands. Excuse the mess on the screen here for just a moment. But if we look here, this was the first bear candle after the extension up or the expansion up for volatility. That was the first bear candle of that move after breaking out of that prior range. So this was a significant area that got bought back at $85,000. We have now closed below it, indicating that, some of the targets that I just talked about, 80,000 is definitely on the table and under, quite frankly. This move is ongoing as it stands right now, but where would things kind of turn around? Well, first, we got to see, at least in the lower term time frames, we got to see this low hold up from yesterday at 82. It was 82,111. We need to see $85,000 reclaimed. And then, quite frankly, not just a retest, not just a bearish retest of $88,700 to $92,000, but now we need to see a reclaim of the top side of this red zone for the range up here, which was the base of support. Of course, this is also where we found the first big higher low after that bearish candle on the way up. That was a nice higher low in the daily. And then we saw that this area held as support for quite a long time before basically nuking through it. We don't want to see a bearish retest of this for the bulls. I mean, price can easily get back up here if it holds this low. But what we need to see from here is closes back above $92,000. We would, in fact, even get a technical low set above $89,000 here, which is essentially right around this wick low in the red zone. We would get a technical low set. This is just another lower low. We need to see a reclaim of an important area of support at around $92,000. And then if price does dip back down, then we would need to see this area hold up as support. So from there, it's got to reclaim that weekly overhead at 93.5. So that's the work ahead of the bulls here. But when I turn on the Bollinger Bands, don't fade a move in progress. This is expansion, and it is full on expansion to the downside. The Bollinger Bands are nice and stretched out. We're at an 88 over 43, so this move has some juice. Even if it does get bounces, bearish bounces back into this zone. Not going to be what the bulls look for if they don't see closes above $92,000 and then the zone hold as support. And especially its continuation on any closes below the lower second at 86,600. So if the bulls want to make some progress and try to hold this low at 82,111, they do need to start closing back above the lower second and then start reclaiming the overhead now resistance and that lower first to kind of stave off full-on expansion or start to slow that down. And even when bands pass, just like on the monthly, when bands pass, even when volatility starts to cool down, we could see a retest, right? Even if the bands are lower than this low, and that's where we'll have to evaluate as each day passes until the end of the week here when I talk to you again on Friday, how things are going. So let's go ahead and take a look at a few other things. We see that we are now in the bearish control zone of RSI here. Where's the critical zone? Just curious. So critical zone is actually 79,222. And remember that fib that I just pulled and the lower that is right below the lower first on the weekly? Well, that's, right around our key area there. And that's, by the way, that is a read of 15 on the, no, I'm sorry, that is the user alert. It is a read of 20 on this particular RSI indicator and most, as that is usually the bearish control zone edge of the bottom side before you get into critical areas, which would actually be the user alert level. Below the user alert, that's actually $70,000. Hey, go figure. This one right here, the 20 read on the daily is basically right around our lower first and a major fib level from the prior range fib extensions at that $80,000, $79,000 to $80,000, and then right below it is where the lower second is on the daily or on the weekly. The lower second's around $70,000, and on the daily here, this user alert critical level at a 15 read is at $70,000. So we have confluence there. So there you go, bears. If you really want to go hit those levels, that would be very, very critical areas of interest to watch out for. Of course, what about exiting the bearish control zone? It is a little ways away here, but what is the top side looking like here? So exits the bearish control zone back above $89,000. Go figure. That's the weekly higher low that was just lost, right? And essentially that's where the front run was on that higher low, is right in that zone at 88,700 on the daily. Well, the weekly higher low was coming in at that $89,000. So and that is pretty interesting how things are lining up. So we do have some confluences for major targets to the downside and major targets to the upside. Now, of course, I need to see closes back above $92,000, even crossing above the SMA or the simple moving average here, which is 12-period SMA, is below that $92,000 level. So, well, it would be encouraging to see Bitcoin back above 88.7 and playing between 88.7 and $92,000. We need to see daily closes above, and then we need to see at the bottom side of that range at minimum at 88,700 hold on any kind of a retest. So that's really what the bulls are looking for. Bears are just looking for continuation of this expansion down to $80,000 and below. We can get a little bit of a bias here for where the pivot is on the daily here for regular stochastic momentum. So we've got a downtrend where we've seen Bitcoin lose support and lose a critical level on the daily, nearly hitting some of the other targets, hitting a major upper first on the monthly. It's kind of in between the basis band and the lower first on the weekly, with that major target there being at right around $80,000, maybe slightly under. What would it take to turn momentum back to the upside? Well, that would be, again, back in that zone overhead that was just lost between 88.7 and 92K, with a daily close back above right around 90,850 or so. I will say that if Bitcoin tracks sideways and doesn't trade back below 82,111, this will aggressively update. So it's Wednesday for me. Thursday candle's open. I'll talk to you again on Friday. So I would be very cognizant of essentially Bitcoin regaining that range, at, above 88,700, grab it onto that weekly higher low at 89 and getting back in that zone. If it can and it holds there, we'll have something interesting to discuss, because there's probably a few things that we could get a bias on coming into Friday, of course, and the monthly close there when I talk to you again on Friday. But as it stands right now, essentially back above 90,850, call it 91K even if you want. And we would get a momentum shift. That would be quite a bounce from here. But Bitcoin, when it wants to move, it moves. And I will tell you that actually is the lower, right around the lower first standard deviation. That would stave off, further downside continuation in terms of expansion, price volatility. Still remain volatile until we see compression again. But what we're looking for is, I'll be honest, bears are looking just to find major resistance at that lower second and continue with this expansion down, as it stands right now. But bulls want to get this red zone back. I'm curious if we can get a bias on the 12-hour here. So the 12-hour fully expanded down, trending below the lower second and below critical level at $85,000 with the close, still trading below it. We've got a 96 over 86, not done yet. But what I will say for the 12-hour, if we do see a 12-hour close back above $85,000, that will start to, essentially not put this in the expansion phase, but it would still leave the window open for lower low prices. But in terms of expansion phase, it could start to see, even if it tracks sideways, bounce and then retest it lower. If the lower second passes price, we'd be looking for, maybe a retest there and then a legit try up, maybe for a more full-on bearish test, not like a little bounce. And I'm trying to find a good example of this. Do I have one in range here? So, because we haven't gotten a really tight compression in this range in quite a while. So, we can use this here, expansion, but we were in an uptrend. Do we have any downtrending expansive postures here? Not really. Where would I be looking for this? Yeah. So we had a basically an expansion down, retest all the way back. This was bearish. The last lower high was up here. You could take that as the last lower high. Never made it anyway. And then retest, that was full on expansion. No, that's not what we're looking for. Essentially, this move is still ongoing even on a 12-hour, 8-hour, still got juice. 6-hour, we can see like this is kind of what I'm talking about. Not exactly, because this move is really aggressive to the downside. But like on the 6-hour here, you could see that we're kind of maxing out our volatility levels for our meters. And that was on this initial push down, the little bit of a bounce, and then push back down below again. Let's go ahead and take a look at the 4-hour. 4 might actually be what we're looking for. Yeah. Okay, so this is it. You get the expansion down, so big expansion down, bounce lower first in this case as resistance, and then a retest lower. But we're starting to see BBWP under the moving average there. So what does that mean? That does mean that things can continue down lower, yes, but we might be looking at the possibility of some mean reversion back to the basis, but it usually is going to take a little while, unless it's just kind of like legs its way up through all of these levels that it just lost to get into the zone up here. But more than likely, close over close for the 4-hour, we're likely going to see basis in some of these critical areas of overhead resistance, 88.7, and maybe even price replace band just above the $85,000 region. So I'm trying to search for some Hopium for you bulls right now, but this move is still ongoing. So I just let it play out, see where we actually get a low set on the daily. Very well could hit our $80,000 target It is in that mid to low 80s region, encouraging in the lower term time frames for at least a little bounce above $85,000. But this move is just kind of getting rolling, and I'll show you what this looks like in charted format for BBWP. This is a big move, right? And its moving average is chasing by quite a lot, and it was extremely compressed. In fact, we haven't seen price this compressed in a while. So this was priming the pump essentially for a very, very large move. But it has gotten to some critical areas of interest in and around the monthly upper first. We're looking at, evaluating this at least through the end of the week and see where things land. And maybe the bulls can get a reprieve on and holding above 82.111 yesterday's low, which was the Wednesday low. Maybe we'll get that old Wednesday into Thursday reversal that was working pretty well for many years, but not so much as of late. I'm not finding any hopium right now until this move is over for you bulls. Just let it play out. Hope that you can hold above 82.111 to prevent further continuation, and then evaluate bounces and potential lows from there. Let's look at a few other things though, because alts didn't get quite as wrecked. In fact, ETH, when Bitcoin spiked down, it might have been the $89,000 low, in middle of January. I think ETH at that time, no, it was more recent. It was early February. So it was actually when Bitcoin was holding up a little better. When Bitcoin put in this big low on the 3rd of February and still got continuation down, but was tracking sideways from there before actually getting that continuation down in this daily downtrend. ETH had spiked all the way down into a critical level of support between 2,100 and 2,300. And it's only just now testing that, and it's actually showing a little bit better relative strength when it's coming to the supports. Now, of course, it had already previously lost a major support that it was holding for a long time. So it's kind of already played that move out. And it's now down into that 2,100 to 2,300 area. But, one of the things that we should be cognizant of is Bitcoin dominance here. So we do have a bit of a double top here on Bitcoin dominance on the daily. And we have that giant wick up to just shy of 65% there, coming in at 64.34%. If dominance starts to falter here, we did get that uptrending structure break and then the higher high here. Could this turn into a deviation? We can actually kind of take a look below 60.6%. Where are we trading at? We're trading at 60.77%. Let's look at the 5-day. 5 days turning over. We need to see it close though in the next 2 days and 23 hours, but it's pointed down below 62. So we could be looking at the etchings of at minimum, and I'm talking about etchings, but we could be looking at the etchings of, at minimum, maybe a little bit of strength for alts. If not, maybe a little bit of an alt season whenever Bitcoin decides to get a wider bounce on the daily. Now, yes, I know that it's bounced quite a bit off its swing low, but I mean a wider bounce on the daily, maybe even regains the overhead range that it just lost. We could be in for a little bit of mini alt season that might turn into actual alt season that everyone's been waiting for so patiently. We can look at a few other things as well. And by the way, crypto isn't the only thing dumping off, and it's not because of the news. The news exacerbated an already existing downtrend. Yes. But yeah, a lot of people blaming the news. Oh my God, because this happened, the chart's nuking. Well, it was already a downtrend indicating that this was a very high likelihood. So at least a downtrend on the daily for a lot of assets. In crypto. Let's go ahead and take a look at USDT dominance. This is going to be an interesting one. Yeah, so it came down to its support. It is now it's teasing going back up to a pretty critical area. You don't really want to see USDT above 5.63%. If you're super bullish, 4.51% dominance. on its way up for the 5-day. Look at the daily, 4.89. Any Hopium on the 12-hour. Maybe we get a little reprieve. Bulls 5.2%, trading at 5.16 in terms of dominance right now. Yes, you can actually play momentum. You can actually play support and resistance. Why does it work? Because it's all based on the price of the other assets and then the rolling in and rolling out in terms of dominance numbers. So it actually is something worth looking at. I will tell you, like, on the monthly, though, it's things set a low in terms of dominance. In fact, it's a double bottom with upside above 4.87%. I wouldn't put too much on that, though. This was a big uptrend in tether dominance as it was gearing up, but it's more likely you want to play on the daily when you're looking at dominance for tether or USDC in that case. But Bitcoin dominance is interesting because it does. I kind of feel like it might be getting there. Might be getting them ready to reverse. We want to see, daily is down below 61.6%. But it's more about that weekly. If it can stall out here, we could be looking at the etchings of Altseason, and everyone will finally be happy. If anything, relative strength versus Bitcoin is what you're looking for if you're in alts. And then that to turn into a little mini alt season that could potentially kick off full on alt season. That is realistically what you're looking for. Let's check on a few other things real quick here. We're going to look at Dow is, so we had Dow heading down and kind of going sideways at support. We have NASDAQ has been 5 days of red candles. Yes, it was up, technically printed above its, it technically printed above the prior session's close, so it's showing as positive, but this is still 5 consecutive closures down. Same for SPY. Maybe if bulls want this area to hold, here's your Hopium. You want traditional markets to get a little bounce, Wednesday into Thursday, kind of turnaround, and then you'd want that to play out in crypto, but traditional markets bouncing and crypto bouncing, that might stave off that some further downside targets, at least for now, for Bitcoin, and then we can evaluate and reevaluate later. But yeah, there's one other thing I want to look at. These Wednesday videos, I apologize, usually aren't this long, but we've had a lot of interesting stuff occurring here. Dixie is what we want to look at. So Dixie's still main area of overhead resistance for a very long time on the weekly, monthly time frames was, essentially the primary resistance between around this 106, a little bit above 106 to 108 for Dixie. We've gotten that deviation above. It broke out and it's coming back for a retest. If you're bullish on risk on assets, you want this to dump down below and back into this longer term accumulation range for Dixie. Doesn't mean you get it though. Below 108.74, and it's pressured down still, but it's still hugging the bottom side of this support there at that 106.30 region with a spike down to 106.12. Yeah. Just trying to get a bias for my crypto friends who are in a lot of pain here. But I can't say much until we see a low set. And, if you're bullish on this bouncing here, you just need to see it trading on closing above that 82,200. If you do see tests down, though, it's very likely to hit some of our targets down there at 80,000, maybe even slightly below at that fib level from this range here at that 79,000. And just so you know how clean this was, by the way, and I stopped referencing it because we had already hit all of our targets that we had been looking for to the upside. I just want you to recall how clean these fib extensions were. We have the lower third on the daily also lining up that 1272 extension, but the 1888 close open right on it on the highs here, not just once but twice. and then holding that 1.618 for a while here before dumping down to the 1414 and then again down to the 1272. And then could we see 1.168? Maybe. Would make sense. It's the upper first on the monthly. It is the lower first on the weekly. It's a fib level of interest. And yeah, we'll see how it goes. You have a wonderful morning, afternoon, and evening. I will talk to you again on Friday. Don't take this as like, oh my God, everything's over, please. It's a monthly uptrend still. Structure has not broken. We have to evaluate things on the daily. And for all of you that wanted, to buy lower and regretted maybe not buying in that range below, these are the times when you need eyes on. And if you had a plan for accumulation, you start looking at where you're going to accumulate the things that you have conviction in. Of course, that's not financial advice. Do whatever the hell you want. And I will talk to you again on Friday. Take care of yourselves. Landy out.